Welcome to Tracking IPDA, another incredible week of price action. We hit all-time highs this week. This week has been fantastic. I'm gaining more confidence in both my trading model and my skills as an analyst. Once I enter a trade, I feel more assured and in control. While I still don't enjoy losing, losses are becoming less impactful. I know my model will win more often than it loses. And when a trade doesn't go as planned, I study the reasons behind it and look for ways to adjust and re enter. Understanding why trades lose has been crucial for me. By analyzing losses and adapting to IPDA's movement, I've been able to make more informed decisions. And as a result, I didn't have any losing days because I'm continuously learning and improving. Doesn't mean I didn't have any losing trades, just I didn't end the day on a losing day. I finished the week with a 6.2% increase in equity. Dollar signs we're talking $1,550. And overall, we're up on the account by 39.7%, which is $9,925. Let's get to hunting. Grab your tools. As always, we'll be looking at the charts in bar replay mode. This means that you won't be able to see my executions. However, you will be able to see my horizontal lines, which represent the time aspect of trading, the most important tool you need to track IPDA's movement: time. Now remember, even though I'm going to show you both buy and sell setups, it's important to know that your high probability trades will be in the direction of your weekly program. You can take counter trend trades with this model. For example, you can take sell setups even if your high time frame direction is bullish, and vice versa. It's just your probability of winning reduces significantly when you go against the high time frame direction of bias. If you're new to trading, I do suggest only taking trades in the higher time frame directional bias. We're going into this hunt with the understanding that you guys have already arrived at your high time frame directional bias. This is a hunt purely for setups. To the hunt, let's go. Tuesday, July 9, trade of the day breakdown. We had the AM session sell formation. We had two. One of them failed and one of them resulted in a W. Okay, let's break them down. As always, we start with the economic calendar, and as you can see, we had high and medium impact news come out at 10 a.m. 9:30 to 10 o'clock is the opening range. We're not looking to trade. We're just observing price and seeing what it's doing. 10 o'clock, we trade above a key high, displacement lower, causing a market structure shift. The displacement lower has a fair value gap CB near the swing high. We wait for a swing low to form to anticipate execution. For execution, we're looking to enter on a fair value gap created in the displacement leg near the equilibrium of the range. And remember, we're always looking to enter post 1010. Okay, so this entry was prior to 1010, so we'll wait for 1010 to come, and after 1010 you would have been tagged at the consequent encouragement of the CB, which is also where the liquidity was as well. Okay, you would have been tagged in this trade at 10:11. You don't get to break even. You're taken out at the same time for a total time of 1 minute in this trade. Drawdown in this trade was 56 tick. For a 2% drawdown, you took a loss in this trade. Okay, the great thing about this model is you know immediately if you're on side or offside. Okay, not in the trade long on if you're offside. Even though we took a loss in this trade, let's consider factors that made this trade a high probability setup. First, we had the time aspect is the AM session, and we entered post 1010. Check. The range, we're in the middle to upper quadrant. We're in the premium for a sell. Check. Liquidity, we do have a short-term high right here created in front at this consequent encouragement actually of the CB. We have 3 out of 3, making this a high probability trade. And even though you took a loss, as always, that is part of the game. Okay, once you took that loss, the market actually offered you another sell setup to get in to make up for that loss. As you can see, we take liquidity above a key high. We displace lower, causing a market structure shift. Displacement lower has a fair value gap CB near the swing high. We wait for a swing low to form to anticipate execution. Reason why you wouldn't have entered in this swing low is because this swing low doesn't need price to come above the 50%. Okay, so we're looking for a swing low to form that allows price to pull back higher above the 50%. As you can see, we had this swing low. The first premium array above the 50% is the consequent encouragement of the CB right here. You would have been tagged in this trade at 1042, breaking even at 118, taking out that trade at the same time as the break even 118, for a total time of 2 hours 36 minutes in this trade. Drawdown in this trade was 48 ticks for a 6% bagged and tagged. Let's look at factors that made this trade a high probability setup. First, we had the time aspect is The AM session and is post 1010, check. Range, in the middle to upper quadrant, we're in the premium for a sell, check. Liquidity, we do have this short-term high and this short-term high. The price comes and takes, also takes this short-term high as well. Once it takes those liquidity, you see immediate reaction to the downside and you know you're on side. So 3 out of 3 matching up to make this a high probability setup that netted you 6%. These two trades were the only trades I took this week. As you can see, we took a loss first from the first trade. That took a loss, and then we saw the model happen again and we go back in and we made the money back for the week, okay, making us our 5% for the week. So like I said, losses are the only things promised to traders, okay, and every loss I'm learning from, and it's becoming less impactful. Like I said, okay, I don't mind the losses now. Wednesday, July 10, trade of the day breakdown. We had the AM session sell formation. Let's break it down. As always, we start with the economic calendar, and as you can see, we had high impact news coming out at 10 and medium impact news coming out at 1. 9:30 to 10 o'clock opening range. We're not trading, we're looking to see what price is doing. And see post 10 o'clock, we have price trade above a key high, take liquidity above a key high, displacement lower causing a market structure shift below the key high. The displacement leg has a fair value gap SIBI near the swing high. We wait for a swing low to form to anticipate execution. For execution, we're looking to enter on the fair value gap created in the displacement leg that took structure near the equilibrium of the range. As you can see, the first premium array above the 50% is the consequent encouragement of this SIBI. You would have been tagged in this trade at 10.25, breaking even at 10.59, taking out the trade at 11.02 for a total time of 37 minutes in this trade. Down in this trade was 4 ticks for a 6% tagged and tagged. Let's look at factors that made this trade a high probability to set up. First, we have the time I spec is the AM session and is post 1010. Range, we're in the middle to upper quadrant, we're in the premium for a sell. Liquidity, no liquidity created in this setup, but we do have 2 out of the 3 matching up to make this a high probability setup that netted you 6% for the day. Thursday, July 11, trade of the day breakdown. We had the AM session sell formation that I personally wouldn't have taken, but it's a valid trade that you could have taken. Just because I'm looking to enter post 1010 doesn't mean you have to enter post 1010. Anyway, let's break down this trade. As always, we start the economic calendar, and as you can see, we had CPI come out in the morning. 9:30 to 10 o'clock opening range. We're not trading, we're looking to see what price is doing. Opening range, we had price trade above a key high. It was a London session high right here. Liquidity was taken above a key high. Displacement lower causing the market structure shift. Displacement leg lower has a fair value gap SIBI near the swing high. We wait for a swing low to form to anticipate execution. And for execution, we're looking to enter on the fair value gap created in a displacement leg that took structure near the equilibrium of the range. And as you can see, the first premium array above the 50% would have been the high of this SIBI. You would have been tagged in this trade post 10 o'clock at 10:02, breaking even at 10:12, taking out the same time as 10:12 for a total time of 10 minutes in this trade. Go down was 3 ticks for a 6% bagged and tagged. Let's look at factors that made this trade a high probability to set up. First, we had the time aspect, the AM section, and it is post 10 o'clock. Check. Range, we're in the middle to upper quadrant, we're in a premium for a sell. Check. No liquidity was taken in the setup, getting in 10:02. We do have 2 out of the 3 matching up to make this a high probability to set up. Would have netted you 6%. All right. Like I said, trading is a solo sport. You have to make it unique to you. Personally, I'm looking to enter the market post 1010. There's nothing stopping you from entering the market. Once you see this green signal, that's go time. That means you can enter the market. All right. Didn't count towards our potential profit, but hey, still a valid trade, all right, that netted you 6%. Friday, July 12th, trade of the day breakdown. We had a PM session sell formation. Let's break it down. As always, we start with the economic news, and as you can see, we had high and medium impact news come out in the morning. PM session start 1:30. We had price trade to a key high, displacement lower causing a market structure shift. The displacement leg has a fair value gap SIBI near the swing high. Wait for a swing low to form to anticipate execution. For execution, we're looking to enter on a fair value gap created in the displacement leg near the equilibrium of the range. The first premium array that we have above the 50% would have been the consequent encouragement of the SIBI. You would have been tagged in this trade at 2:02, breaking even at 3:20, taking out that trade at 3:30 for a total time of 1 hour 28 minutes in this trade. Drawdown in this trade was 17 ticks for a 6% bagged and tagged. Let's look at factors that made this trade a high probability set up. First, we had the time aspect is the PM session. Check. The range, we're in the middle to upper quadrant in the premium for a sell. Check. Liquidity. We don't have liquidity created in this setup, but we do have 2 out of 3 matching up to make this a high probability setup that netted you 6%. This brings us to the end of Tracking IPDA. I hope you guys enjoyed this one and hopefully you learned something. Thank you guys for tuning in.